Hello, my name is Steve Bigelow with the Candlestick Forum. I'm going to kind of delve into the psychology of candlestick patterns because the combination of candlestick signals and knowing the psychology that created those signals provide an immensely powerful, information or confirmation of what your price movements are going to do. This helps investors be in the right trades at the right time. As we can see, the T line is a very effective indication of investor sentiment. When you start seeing sell signals and closes below the T line, the probabilities remain very strong that you're in a downtrend. So do we get whipsawed out of trades? No, there's a very simple rule. You stay short, or you stay predominantly short, as long as you don't see a close above the T line. We could see what the Dow did today. Started out of the chute, traded positive, but it made it, we made it more diligent to watch to see what the index was going to do by the end of the day. The 10-minute chart started showing selling going into the middle part of the day, and it traded lower all day long. Now, the reason a panic reversal of closing short positions was not instigated is at the same time, the NASDAQ, which has been trading below the T line, traded lower most of the day. So there's a very simple analysis. If you see the NASDAQ trading lower and the Dow trading higher or vice versa, the existing trend usually will be remaining intact because it doesn't show there's been a major change of investor sentiment, just the shifting of funds. So the comfort level is that you can stay short with much more clarity or much more confidence. Even though the Dow is trading up strong, it wasn't showing there was a, corresponding investor sentiment showing that there's been a change in the uptrend. This allowed for staying short even when trades are trading positive because of a simple factor. Once you saw the sell signal, then a close below the T line, you stay short, especially if your stochastics are still confirming that you're in a downtrend. The reason I'm pointing this out is because we're going to be doing a 2-day training on March 26th and March 27th. This is kind of the bread and butter. This is the information that changed my trading style from being the worst investor in the world to consistently taking profits out of the market. Because every time we put on a trade, knowing what the nature of that signal is, a bearish kicker signal is an extremely powerful downtrending signal. A bearish kicker signal, trading back below the 50 and closing below the T line, has that much more confirmation that you're in a downtrend. The reason we like to illustrate this is because it is so clear that when you see that reversal signal, this is what the results are likely to be. So you can stay in that trade until you see a candlestick buy signal, especially in the oversold area. The more elements that you can put into your analysis, we know a dumpling top is the opposite of a fry pan bottom. We know a J-hook pattern is the opposite of the classic pattern. We have a dumpling top, J-hook pattern. We shorted snap today because notice the lower open broke this level, creating a bearish J-hook pattern with the likelihood that wave 1 and wave 3 are going to be the same, or at least targeting this area down here. Again, this is just simple analysis of what investor sentiment usually does with a high degree of probability based upon the observations the Japanese rice traders have provided for us over the last 400 years. This is where the investor sentiment or the psychology of candlestick analysis not only allows you to identify what the signals are telling you there's a reversal, but understanding what's going on in investor sentiment when you see these type of things. We're long on MULN because of this alert right here. You can see it was a consistent downtrend. Then you could see it was kind of a bullish flutter kicker, big breakout move. The next day it didn't work. However, that told us there was a new psychology or a new investor sentiment in this stock. When the consolidation was over, we had a bullish engulfing signal. Stayed above the T line. They couldn't close it below the T line. Another bullish engulfing signal, implying the uptrend was in progress, and you can see what it did today. It popped up some more. We're still targeting this level. Now, why are we targeting this level? Because this whole analysis right here tells us, based upon the candlestick signals and the alert that there's a new investor interest in this stock, that we're in the right place at the right time. We use this on not just identifying the signals, but understanding what the psychology was that created these signals that told us the probabilities are that this one is now going to be heading higher. This is very simple analysis. The more pieces of evidence that you can put into your analysis based upon what we know are strong reversal signals or continuation patterns. When we see the buy signals down here and it starts trading above the T line, we can identify the possibility of a scoop pattern. We know the expectation of a scoop pattern, a strong slingshot effect to the upside. We can see exactly what investor sentiment does in this uptrend. Fails when it reaches the 50, but they couldn't close it below the T line. They did an inverted hammer, bullish confirmation, bobble breakout. What do we expect about this trend? Wave 1, wave 2, wave 3. Every time we put on a trade, we can analyze that the probabilities are greatly in our favor. Now, why is this relevant? Look what it did today. The markets were down. This pattern is still working, not because of today's trading in the markets, but because of the accumulative knowledge of everybody buying and selling this pattern, which we identify as a very strong pattern. So join us March 26th and 27th. This will be a two-day training that is well worth your while. Not only do we identify the signals and patterns and the top rank signals and patterns, but we show how you improve your probabilities of being in the right trade at the right time based upon your entry, when to take profits using your exits, how to use gaps in conjunction with candlestick signals to dramatically improve your profitability, where to put the logical stops based upon the common sense aspects of candlestick signals, and simple scanning techniques to find the best trades in less than 20 minutes each day. So join us, because not only is identifying the patterns very important, but learning what the psychology was that created those patterns. When you combine all that, now you've got the perception of why the smart money buys where they buy and where they sell. You will be now in the, in the ranks of being the smart money, buying at the correct time and selling at the correct time. That'll be it. We'll see you in the chat rooms.